Hey there, what's going on? My name is Leo, and in this video here, we're going to look at the Intel Corporation, ticker symbol INTC. We're going to look at three different things today. We're going to look at the company metrics, we're going to analyze the financial situation and projections of the company. Finally, we're going to look at a price that we should be paying for Intel and if it's worth buying today. So let's jump into the video. Here we go. All right, let's just jump into it. We're looking at Intel over here. Current price $51.94 at the time of recording this video. We're gonna go through these three columns here: company metrics, financial valuations, and finally we will do the price analysis to try to see what is an applicable price for this company here. So what I like to do is kind of see where the company's currently at and kind of compare it to where the average of the company is. So right now the PE is at around 10.0, and the average PE for this company is 15.37. That's over 5 years. We want this number to be beneath around 20. We want it to be lower than 20, and for the average and current, it's both hitting those marks, so that's great. Earnings per share is at 5.19, and the current 5-year average earnings per share is around 3.70. So that's an improvement. That's what we want to see. Good. Our return on equity is 25.11. We want to see this to be. Well, we want this to be over 15%. Ideally, and we have that here for the trailing 12 months, and 22 is our 5-year average. Great. Profit margin 26.89. Our average profit margin last 5 years has been 23.69, so we definitely have an improvement, which is great. Our revenue is at $78 billion. Our income is at 21, and our free cash flow for the trailing 12 months is 17 billion. Our average free cash flow has been around 15 billion. Important to note that Intel does pay out a dividend, and that dividend yield is 2.68%. And of those dividends, or of that dividend, $5.6 billion is paid out. I want to see if Intel is able to pay off that dividend, and they can easily do that. Average free cash flow has been $15 billion. The dividend is roughly 1/3 of that amount being paid out, so they can easily cover that. So that's really good to see. Because some companies will just take on debt to pay out the dividend and kind of just lure you in, and we don't want to see that. So Intel, awesome. Return on invested capital is at 16.62%. Our 5-year average is at 18.35%. We want to see this over 10, and they've done really well the last 5 years, and currently they're upkeeping that at 16. A little bit of a decrease, but hey, you know what? These are phenomenal numbers. Altman Z-score. It shows the predictability if this company would, let's say, hypothetically go bankrupt within, let's say, 2 years or so. We want this number to be over 3, and Intel currently stands at 3.34, and that means it's safe. So that is phenomenal. Great. Hope it just stays like that. Over here, we have the Piotrowski score. There's 9 questions and 9 parameters if a company meets based off of, let's say, previous year's assets and liabilities, and talks about the financial health of the company. We want companies that are in the 8 to 9 range. 7 is all right. 9 is obviously a perfect score, and Intel's rank is at 8. So that means it's relatively a strong financial case. So that is company metrics. Let's move on to our financial evaluations section here. And these are the metrics that I've put together to see, whether this company is going to the next step to take a look at it. So this is kind of like phase 1. Company metrics is like our phase 1, and then evaluations is phase 2. So we have a perfect score of 10. So let's just go down these metrics here. Some of them we've already gone over, but Just to reevaluate, we have our 5-year PE ratio under 20, and that's phenomenal. So it's at 15.37. So that's a point. Our current ratio is at 2.07. And what current ratio is essentially the liquidity of a company. You want this number to be 1.5 or more. So at 2, they're essentially in a really healthy spot, that in case any kind of debt or surprise debt that shows up, they can take care of it. ROE average to 22.13. We want this to be over 15, and we have that, so that's great. EPS growth. So over the last 5 years, we want to see our earnings per share growing. As an investor in the company, we want to see that the company's bringing in more earnings, and they brought in, this is a 398% increase from the 5 years ago, so that is phenomenal. I gotta go see what 5 years ago was, but this increase is great to see. So the next metric that's up is debt to equity. We see that this number is at 41%, which is great. We want it to be under 50%. Now, what debt to equity is a ratio based off the financial leverage of a company, whether that company is building or using its leverage based off of equity within the business, or taking on debt to do those types of activities. So being under 50% means that's low debt and high equity within the business, so everything's kind of internal. All right, so we're on to the next final 5 evaluations. This one here, share dilution, this one is a big one. So what a company can do when you buy stock in a company, they can either issue more shares or buy back shares. We want companies to buy back shares, because what that does is it increases your ownership of the company. So I'm going to steal this from Everything Money. Love their channel. But if you own 1 share and there's 10 shares of this company, you own 10% of the company. Easy enough to understand. Now, this company takes away 2 shares. So now the total share count is 8. You still own your 1 share, but now because there's less shares on the market, you own 12.5% of the company. That's a good thing. And in this case of Intel, they have been decreasing the amount of shares that they have by around 5% over the last 5 years. So that is phenomenal to see. We want to see more of that, because as an investor, now you'll have more ownership of the company. So that's important. 5-year net income growth. We're at it was 102% increase from 5 years ago till now. So that's great to see. Like, it's a check mark, little 1 here. 5-year free cash flow growth. We're at 71% increase from 5 years ago. That's amazing. 5-year return on invested capital average is 18.35%. We want this to be over 10%, and that average is way above that, so that's phenomenal. And then 5-year revenue growth. This is the lowest of the bunch. It's at 7.13% over the last 5 years, which makes sense. Intel is a larger company at it's a $200 billion market cap here. So it makes sense that this company would be a slower growing company, but seeing revenue growth over the course of 5 years is important. So that's still great to see. Now, we've done company metrics, we've done financial evaluations. So now, judging by what we see here, Intel is looking pretty good. It looks like it's a fairly healthy company. Now we're going to move on to our last step here, and that's finding a proper price to pay for this company. We want to find the appropriate price, because you can overpay for a lot of things in this current market. I'm going to go like super conservative on here. I'm going to play around with a 10-year number. I'm not going to even touch the 5-year number, to be honest, but I'm going to probably hover around it as like a 3, 4, 5. So at least like that 5 is kind of approaching the 5-year number, and 4 kind of stays on the 10-year route. All right, profit margin. We are around this 22 to 23 area. So I'm going to just be conservative enough and kind of go 20, 21, 22. Free cash flow margin. We got what, 19, 21, Let me just do like 18, 19, 19.5. That's for PE. So you know what I might do? I might just do the same. So I might just go like 14, 16, and 18, and then keep this the same as 14, 16, and then 18. Kind of reflect our averages, or at least we can kind of hover in the in this range here. And essentially what I'm doing here, I have 3 evaluations that I'm looking at. I should also probably change this here to do a 10-year analysis, because I think Intel's going to be around for a long time. I'm really focusing here on the conservative moderate. I'm really treating this as what might likely happen. That's why I always kind of gravitate towards somewhere between the 5-year and 10-year number here. And this is aggressive. This is the wish list. And then conservative obviously is, we're taking a back seat. All right, desired return. I'm going to put 13% return. Lucky number 13, and we're immediately getting some values here. So at our current price here, we got 51.94. Average calculation for all of these is around $62. So as long as we pay $62, judging by a collection of all these numbers, we should be able to hit that 13% return. Now where things kind of get a little bit muddied, our conservative estimates, this is the one I really want to hit, and we're at 48. It's so far showing that this company is undervalued. So if we pay it on 62, assuming these are correct, right? Anything under $62, which we're currently hovering now around 51, to buy. And now I'm not saying go out and actually buy the company, but this is a good starting point to get some more due diligence done. But from a price perspective, it is looking pretty decent. Let me just figure out. Let me put some other assumptions in. Let's go 12, 14, and then 16 for the high side. And we'll go 10, 12, and 14. Okay. So yeah, so obviously the prices have decreased a little bit, but we're still in that range. So we're just in that margin of safety to get that desired return. I would have loved for this one to hit, but it didn't. This is good. Like, I like to see this, but our conservative average is the one that's kind of the kicker. At least 2 greens would have been great. But in terms of this evaluation, is Intel a buy? Full disclosure, I do own shares of Intel. I believe that the company is undervalued. Now, I'm going to continue probably buying this company as it creeps towards below 50. And that's where I kind of want it to be. If it starts approaching these numbers here, like the 40s, phenomenal. So with that being said, that is the analysis on Intel Corporation. This is a long-term play. This is not a company that you can get in, get out, and that's just not my mentality at all. Like when I do a 10-year or 7-year horizon analysis, I plan to hold that company for that period of time. So I don't think I'm ever going to sell this company unless the fundamentals change. So drop a comment down below for a company that you want me to evaluate. Please make sure you like the video, subscribe, and I'll see you in the next one. Thanks, guys. Take it easy.